We're basically going to make it so that once we go to record, it's going to automatically go onto YouTube. Don't worry about like, people seeing it off the cuff because we could always take it down and edit it afterwards. But
Okay.
the live stream is actually a really kind of like a dynamic feeling. Like, there's a possibility somebody, just like shows up randomly and it's like, and even me and Mike, like this is the studio in the background.
Uh-huh.
Like there's a different energy when it's live streamed. We have this saying in live performance. It's the cross point between exhilaration and embarrassment. So, just hang out in the pocket, a nice midpoint, you'll be fine.
You're like, oh,
Yeah.
shucks, I shouldn't have said that.
Oh, I've done that 100 times on the show. 100 times,
Oh
and
my
nobody
gosh.
sued me, so I'm okay.
All right.
All right. All right, so and I'll also record it so that we can adjust it if you need to later on.
Okay.
Last question, do you want me to change the slides as we go through, or do you want to change the slides? Either way is fine.
You change them because I'm having a problem for whatever reason.
We're
It's
basically going to make it so that, oh, that's the preview. See, it's already on YouTube as a preview, which is
okay.
pretty cool. All right, let me go grab those slides. Hang on one moment, because I know you sent them over to me. Vivian, Vivian,
Because I'm
Vivian.
having like a I don't know all of a sudden well, it's been happening for a while where it's not moving the way like when I click on the next button, it's not
Uh,
moving. So I have to like reshare, then it starts to move, and I don't know how to correct that.
gotcha. All right. I will be
Okay.
happy to help you with
So
that. That is not a problem. All right, so we're going to download that. Let's just do it there. Downloads. Microsoft. Boom. There we go. And from the beginning, and there we go. Are there any special animations or anything to that effect, or it's just go for it?
just go for it.
Okay.
Can you hear me clearly?
Yes, very clearly.
Oh,
And
okay.
me as well. You can hear me as well?
Yes. Yes.
Okay. All right, so I'm going to introduce you. I'm going to turn on the recording. There's no countdown on Zoom, so just you'll
Yeah.
hear the recording and process and everything.
Yes.
I'm going to introduce you, Vivian London Crooks, London Tax Services, and she's going to be talking about how to structure your finances, especially so that it's leading up properly to tax season. And then I'll turn it right over to you.
Okay.
All right. Mm-hmm. All right, everybody, welcome to our first and hopefully what will be many, many business presentations and series that we're going to be conducting with very valued business members that we've known for, sometimes years and years. One of them is my colleague and friend, Vivian London Crooks from London Tax Services, LLC. I've known her in several networking groups, and she's very reliable in what she does, and she can help you with your accounting and bookkeeping needs. And tonight, she's going to be doing a webinar on how to better structure your taxes and your finances so that you can save the most amount of money possible, especially during this great time known as tax season. So, Vivian, thanks for joining us tonight with Rockland's News and also the BFC team. There's a lot of people that kind of like participated in making this thing happen. So, we appreciate your input on this.
Thank you. Thank you, Tom, for having me and this opportunity to educate and share with our audience. It's such a time of tax season, and there's a
Hmm.
lot of questions that go buzzing all over. I actually got one client that texted me today just to find out, is it true that single mothers can file as self-employed? And I was kind of a taken back by that. And I said to text her back and said, it doesn't matter if you're a single mother or not, if you earn income and you're self-employed, you can file. But what happened was somebody must have trying to scam her and just trying
Oh
to,
boy, yeah.
let her, do something or get to have her to file a return because she hasn't worked in years. to
Hmm.
file a return, and they'll probably fudge some numbers, and then it will be a wrap.
Of
So we just have
course.
to be very mindful. Not everything you hear is necessarily true, and it's important to speak to reliable and credible resources, such as your accountants, your financial planners, your bankers, etc. Those who are in the financial field for many years.
Yeah, and the
So
atmosphere right now, if I can just add this, is the atmosphere is kind of going back to caveat emptor. It's buyer beware. You got to really find the right people to rely on. I mean, and I can speak very truthfully about this. Finding the right team to help with your administrative and your business matters. It'll propel a business. It'll propel a person to save a lot of money, quite frankly. So
absolutely,
yeah, I'm
absolutely.
gonna bring up that presentation that you sent me. I'm not sure if you see it on the screen or
Yes,
okay,
yes, we
great.
see it. We see it.
Yeah.
Awesome. All right, so I'm gonna just for a few moments, maybe about 20 minutes or so, just to bring some knowledge to you. You might learn, or you might be in a position where you don't know, and this information will help you. We're about educating and making sure that you make good decisions with your money, especially when it comes to your taxes, audits, business structure, which helps your financial wellness. All
Mhm.
right, so tonight we'll be talking a bit about protecting your money. And you saw on the screen that we are going to be just going over a few points as to why does the IRS audit taxpayers? Um, how can we maximize on our deductions and also choosing the right business structure? These are the 3 points that we'll be going over tonight, and hopefully you'll be able to understand the importance of these items as they play into your financial wellness. Now, this is one thing that comes up very, very often. And many of you probably know that the IRS is short staffed. So to call the IRS nowadays, it's a whole
Uh-huh.
day on hold.
Yeah, been there, done that.
So you don't want to get audited. Try to minimize that as much as possible. But I'm just going to share with you a few reasons why the IRS would audit you. So sometimes we have mismatches on your W-2s, 1099. So your 1099 might say one number, and on your tax return, you have another number. Now, one of the things that I'm going to emphasize is making sure that your W-2 or 1099, it's not handwritten. It needs to come from a reliable source like
Hmm.
your paychecks, your ADP, who QuickBooks, whoever is printing those, to make sure and that it's not a handwritten, because these things do alert and come up as audits,
Hmm.
because numbers can be imposed and they cause problems. If there's a mistake on your W-2 or the 1099 that you have noticed, immediately contact the person in whom you receive that W-2 or 1099 for, because they actually send this information into the IRS and the state. So whatever you get, the IRS gets. So a lot of times you might say, well, how did they know that I got interest income? Because the institution sent them that 1099 INT to the IRS. You might not have downloaded it, but guess what? The IRS received it.
Hmm.
When you're having large or unusual deductions, and this is one of the things I remember a client of mine telling me, "Oh, I know you're very meticulous and you want to protect me from an audit, but," and she was so correct, because I need to make sure that whatever numbers that you are having on your return actually matches what you actually spent. Don't go rounding numbers, because in the real world, numbers are not rounded. So if you have supplies and you said, I spent $39,000 in supplies, that number is not a real number. That's an estimate because it's 39,000. But if you would say $39,246, that a little bit sounds a much more realistic. You want to make sure whatever industry that you're in, that your deductions are comparable or they match your industry. So if you are in the world of plumbing and you have expenses, high expenses in office supplies or food, like astronomical numbers, really, really high, that can be a red flag, and IRS may audit you. High cash income. So a lot of times we say, oh yes, cash is king, cash is king. But if the IRS looks at cash as a way of you possibly trying to hide some of that cash. Okay, so we want to have records as to, even though you receive cash, to have receipts. You can run your books through QuickBooks, or you have your bank statements to support what cash income you have. Another big one is repeated business losses. The IRS would look at this as, is she really or he really in business? Or is this really a hobby? Because every year you having these losses every year for the past 4 years, 5 years, 6 years, and the income is very slow. So the IRS gonna possibly investigate, is this a real business? Are you really trying to earn money? Or you're just doing it as a hobby so that you could evade taxes? It brings, because those losses would actually bring your taxable income lower, therefore you pay a lower taxes, and that's called tax evasion. So you don't want to get involved in things like that. Then the other thing is random selection. The IRS can just have whatever pool that they have and just randomly select persons for an audit.
Now, I think that the general percentage, the average of businesses that get audited in the United States is approximately 3% per year, 3 to 5%, depending upon the year. So it sounds like there's a, I mean, obviously, if you have one of these particular categories, for instance, high cash income, if you're in, let's say, a pizza restaurant business or something that brings in a lot of cash, do those percentages go higher than the 5%? So it might skew it for like a cash heavy business?
Yes, it possibly can be higher, especially for those cash businesses, restaurants. And I didn't even think of that one, but you're right. The restaurant business is, a lot of cash come through there. But I mean, yes and no, because a lot of people are paying credit cards, debit cards for their purchases. But then you have the tip income, which is cash. So yes, it that percentage can go up.
Got it.
Now we're going to discuss ways in which we can reduce our audit risk. I'm going to blend the 2 points because they are crucial to your bookkeeping, your reporting accurate income. And how do you report accurate income? By keeping your receipts. You have your invoices that you submit. You might have a system where it records your receipts when you receive them. So keeping accurate records. So at the end of the year, when you run your profit and loss statement, you would see what your actual income is. Don't guess, don't estimate. Use your actual income, because if the IRS does audit you, you have to show them the necessary support to back up that number that's on the tax return. Avoid aggressive deductions. So 1 year you might say, you know what, yes, I did a lot of improvements on my business, I did renovations, I did, and it might, yes, be true. but not every year you're going to have major renovations.
Hmm.
Okay, so we just have to be mindful to avoid the aggressive deductions so that it does not create an alert with them. File consistently and file on time. Try your best, and that's why I emphasize a lot to my clients. Do your bookkeeping. Take out, even if it's 1 hour of the week or 5 hours for the month, whatever it is, to do your bookkeeping. Because when you wait until the end, you end up missing on things that you could have gotten, deductions that you could have gotten if you caught them earlier in the year. So you don't want to leave everything for the end of the year. Have a routine and
Hmm.
making sure
Yeah.
that you file on time, you keep your books up on time so that you're not in a rush. Work with a tax professional, especially for those who have businesses, because you might think that, yes, I'm doing XYZ, but when the tax professional sees it, they would notice, like, okay, yes, you bought an asset, you bought a machine or equipment that was $5,000. And you might not have mentioned that to the tax professional. Say,
Hmm.
oh, I'm just going to put it on $5,000. But then you, because you didn't do that, you just actually put yourself in a position where you could have depreciated that asset over a period of maybe 5, 7 years. Because doing that comparison, it might be helpful in that 1 year, but you don't know what next year will be. So it's good to have a conversation with a tax professional to run different scenarios to see what is more beneficial for you and your business.
Yeah, and that's an excellent point. And my very basic accounting understanding, and obviously having professionals is very important here. But from what I understand, you mentioned scenarios. So it's not a one size fits all situation where the numbers come in, it's only one particular set of numbers that gets output to the IRS, depending upon what you have as far as inventory, cash on hand, and everything. There's ways where you can minimize your tax liability over a course of 5 years, like you said.
Correct. Correct.
Hmm.
Absolutely.
Yeah.
It's like, getting instant gratification now, and then next year you might have a booming year. And like, oh man, I wish I could have taken part of that deduction in a bring forward some of that to the following year.
Yeah.
So planning is especially when you're a high income earner, planning is very, very crucial.
Hmm.
The
Absolutely.
question I have for you is, are you leaving money on the table? Are you missing deductions? Now, I'm just going to share with you a few of the typical deductions that people a lot of times often miss. You might miss deductions like home office. You have rent, utilities, internet, property taxes, home insurance, vehicle mileage. That's another one that people sometimes miss. Now, just to piggyback off of that, when someone is deducting the mileage, you can either deduct mileage or the actual expense.
Right.
But how do you know which one will benefit you more? So, what I advise my clients, at least for the first year, track your mileage and see how much business miles have you traveled for the year versus how much you spent in gas, in repairs, in tires. Then at the end of the year, we'll compare and see, was the mileage enough or larger than the actual expenses, and we'll go with the mileage. If it's vice versa, we'll go with the actual deduction. But you wouldn't know until you actually track your mileage going for the year.
Hmm.
Now, what constitutes business miles? Things like client meetings, you running to the post office to mailing or the bank, you have supply runs to make, you have to see customers at a different location. So all of those miles, anything that's pertaining to the business to help the business operate and you're driving is considered business miles.
Hmm.
Now, when you're starting a business, there's something called startup organizational costs. So if you're starting a business and you had to borrow money from yourself to start up the business or from someone else, you might $10,000, $15,000. That expense, the cost of that is a deduction. Okay. A lot of people don't was like, oh yeah, I spent a lot of money when I start the business, and I don't know if I can use it. I get that all the time. Yes, you can, because it's an investment into the business. The
Right.
first year, 3 years, you're not making money, usually, depending on what business industry you're in. So those costs are definitely a deduction. Things like continuing education, software and subscriptions, all those things are deductions that business owners can use. For individuals, you have things like the student loan interest, educator expenses, your charitable expenses, medical and dental expenses. All those are possible expenses or deductions that you can use on your return.
Mhm.
Poor tracking. The next one is poor tracking expenses. Tracking, you're not tracking your expenses, and that is, I can't say how often I see this. And although I would remind people during the year of making sure you track your expenses, at the end of the year they're like, "Oh my goodness, I don't know how much." I said, "Well, I'm so sorry. You're gonna have to go through the whole year and pick up all your expenses." So when you don't track your expenses, the reason for this is you will be missing out on reducing your tax liability.
Mhm.
Okay. So that number, if you do an estimate, that estimate could be actually lower than the actual. You don't know. So that's why it's important to make sure you're tracking. Year round, not having year round tax planning.
Right.
Now, especially for, like I mentioned earlier, high income earners, they're so busy in their business and they don't realize that little things that they're doing, or even doing comparison, trying a different structure, incorporating payroll, doing retirement planning or savings, employee benefits. All of these things can help you lower your tax liability all through tax planning. So when you don't do tax planning, you're leaving money on the table.
Mm.
And I mentioned earlier, a wrong tax structure. Now, I'm going to tweak that a bit. It might not necessarily be a wrong tax structure. It might not be the most beneficial tax structure
Yeah.
that you currently have.
Hmm.
But you would only know that if you do tax planning to see which structure best fits your situation. And I want to stick in also, not because you're a structure, you started off as, say, for example, a single member LLC, you have to remain with that structure till your business dies or you stop doing business. You can change your business structure.
Hmm.
Okay. And there's forms that you would submit to the IRS that will assist you in changing, and you see a professional to help you with that changing of your business structure if it's applicable to you.
Question, can you change from, and you mentioned about LLC, being able to change from an LLC to a different corporate structure. Can you change from, I know it's just a designation, but can you change from an S corp to a C corp if you need to?
Well, you're actually a C corp first. You're really a C corp, and you have to elect to be an S corp.
Gotcha.
So
Okay.
you're already when you incorporate, you're a C corp. But until you do the election, then you become an S corp.
And can you reverse that process to become say for instance, if you take on a good number of employees and you want to basically divest yourself better?
Yes, you can. You can. But I think there's a period of, you can't just like after you change it 1 year, you can the next year you change it back. I think it's a period of 60 months, it's like 5 years
Hmm.
before you can change from one entity structure to the other.
Gotcha. Okay. Yeah, because I think at some point, not now, but I just trying to look into the future and just see what the necessities might be, say for instance in 2030. So I'm going to change the slide
Right.
here.
Okay, some of the examples of missing tax savings: retirement contributions. Some people like, oh, I'm not doing that because my company's not matching. It's your money. You're getting a tax break off the bat when you contribute to it. So on your W-2 in box 1, you would see that number is lower than the number in box 3. That means that you're only paying taxes on the lower amount and not the higher amount. So if your income was $100,000 and you see in box 190 and in box 3 100, you're paying taxes on 90 and not the 100. Taking part in health related benefits, flex spending, what do you call that? The HSA plan. Your company might have flexible spending for travel or for health. Take advantage of those. That's like tax-free money off the bat. You get reimbursements and you don't pay taxes on that. Education credits. If you or your child or dependent goes to college, you can get education credits for that. So that helps to reduce your tax liability, and there is income thresholds for this particular credit. So you just have to be careful of what the income threshold is for that particular tax year. Business expense deductions. Going back to business, anything that's related to operating your business is a business expense and can be deducted. Do you have the right business structure? Do you have the right business structure?
Okay, accidentally went to, okay, sorry about that. Go ahead.
Okay, no, that's fine. That's fine. All right, so the 4 business structures that we have, you have the sole proprietor, you have the limited LLC, limited liability corporation, you have the S corp, and you have the C corp. And I'm just going to share with you, just to give you an idea of what the difference is between each of the structures, like the pros and the cons. So as a sole proprietor, you have no separate tax return. So everything is on one tax return, your 1040, and it's a schedule that you attach to with your 1040 when you're filing a tax return. And that form is called the Schedule C. You're subject to something called self-employment taxes, which is 15.3% on your net profit, not your gross, on your net profit. These profits are taxed at the individual income tax rate. Okay, so some of the pros is that it's simple, it's inexpensive, you have full control, easy bookkeeping. Some of the cons is as it has no liability protection. It's a higher SE, which is self-employment tax exposure, and it's harder to raise capital. Okay, next we have the LLC. The LLC, which stands for Limited Liability Company. Some of the pros is that it has that liability protection. It has flexible tax elections. It has fewer formalities than corporations. Now, some of the cons will be that you have higher state fees when you're applying for LLC. It does cost a bit more. You have the SE tax is applied as well, unless you are S corporation. So you can be a single member LLC and you can be a S corporation LLC. Whenever you open your company, when you started at first and you name the company, that is, you're always an LLC, but only thing that you're changing is the entity structure. Okay, then we have the S corp. I think I'm missing one, partnership. I don't have it on there. But the S corp files a different return. So you file the 1120S, and it's a pass-through tax structure. What does that mean? That means that the company prepares its own return, and whatever the results is, whatever number of shareholders that you have within the company, if it's 1, 2, 3, that profit is going to be pass through or put on your personal return. So that business return is going to produce a form called K1.
Mhm.
Each shareholder gets a K1, and whatever is on that K1 will be used to prepare your taxes. You are one of the pros for being an S corp is that you eliminate the self-employment tax, so you're not subject to that 15.3%. Some of the cons for the S corp is that you have to run payroll. Payroll is required. You have strict IRS rules, and you're limited to 100 shareholders, and it has to be U.S. citizens or residents. Then you have the C corp. They file a separate return. It's just 1120. And some of the cons is that it's easy to raise capital. You have unlimited shareholders. You have fringe benefits deductible to the corporation. It has a lower corporate tax rate than many of the personal tax brackets. Some of the risks or the cons are that it's a double taxation. It has more compliance and formalities. Losses do not pass to its owners. All right, so just to give you, and then we have another one that's partnership. It's not on the screen, but that's another tax structure where you have two or more persons that are owners of the company. And as a partnership, you file a separate return, which is the 1065 return. And one of the cons is that each person is subject to the self-employment tax as well.
Mm.
Okay.
Got it.
Now, when do you review your tax structure? Sometimes people are like, how do I know when I should change or when I should leave it the way it is? If your income has substantially increased, that's the time to have a conversation with your tax planner, your tax strategist. Paying high self-employment taxes. If you are paying high self-employment taxes, that means that your net profits are very high because you pay that tax on self-employment taxes. And that's one of the indicators that you need to have a talk with your tax strategist. If you have to add employees, that means your business is growing. It's time to have a conversation with your tax strategist. If you had no review in 2 or more years, we should have a talk with them because things change.
Mm-hmm.
And as business owners, we're in business to make money. We don't want to stay at the bottom of the pole. We want to grow and grow each year. So as we grow, we have added employees, we're making more money, we're buying equipment, we're doing a lot of things. So because of that, there are benefits that you can take or can have or are applicable to that you might be losing out on if you don't have that conversation.
Mm-hmm.
Next steps. If you are in any of these categories and want to have a talk to discuss more on how we can review what you have, because we have a complimentary 15-minute consultation to discuss, your situation. By all means, you can contact us at refunds@londonstaxservices.com, or you can give us a call, excuse me, at 646-917-7714. My name is Vivian London Crooks, and it was a pleasure sharing with you information that will be helpful to make you successful in your business growth. And I want to thank Tom. Tom is amazing.
Don't worry about it. Don't worry
for making this happen.
Just here to moderate, and actually we have some questions here. The first is there a particular accounting software that you recommend for any type of business owner to really keep track of their records? Any particular applications that you prefer?
Sure. So I've been working with QuickBooks for many years. It's simple enough for somebody who is tech savvy. It's not too accounting-y, as that's such a word. It's very easy to follow. It does invoicing, it does payroll, it does the bank feeds come in that you can categorize. So it's very user friendly, I would say. Some people get intimidated because there's so many moving parts, but once you, it's simple enough. I've heard of Zero Tax Account, and there's others out there, but my favorite is QuickBooks.
Gotcha. And how about any particular receipt system? And I personally deal with this is like when I go to a restaurant and we had our meeting with the Bi-State Professional Networking Group. I still don't know which two states. You know, is it New York and New Jersey or is it New York and Connecticut? Nobody's ever told me, but it's the Bi-State Professional Networkers. So we're there and we were there this morning. But you know, we get a receipt for let's we're having breakfast and coffee and everything. Do you any particular applications you recommend to kind of scan in the information and just keep track of it?
Well, that I think that QuickBooks has a scanning
Hmm.
app for that. I am not big on these receipt systems. Whatever one works for you, and that you, because I don't really use them, but anyone that works for you that makes life easy for you, by all means, go with it. Whatever, you don't have to think too hard about it. Go for it.
Gotcha. And you also mentioned about mileage, miles for traveling, business travel, of course. Anything you recommend as far as tracking those miles, apps, or do you use a notebook? What's your method?
So there is one called IQ.
I've heard of that. Yeah.
Um, you can use that one. That comes highly recommended that you turn it off. And I'm sure there's others. I don't really keep up on them, but that one I've heard that is really, really good in tracking your mileage. If you want to do the Excel, you know when you begin, when you end, you want to track it that way, that's fine. Or a notebook, that's fine. But sometimes we get so busy in work and we don't remember to do these things. So that app, when you turn it off, turn it on when you're going on a business trip, turn it off when you finish your business trip. It's that helps a lot. And at the end of the year, you get a report, or end of the month, you can run a report to see how much miles that you traveled for the year, the month. One of the other things too, like if you are I didn't mention it earlier, but it just came to mind. If you're working for Lyft or Uber,
Hmm.
they track their miles, and at the end of the year, they send you a summary report of the trips that you took and the mileage that you drive. So that is very, very helpful. So for those Uber people and Lyft persons who travel a lot, that is they do that for you, which is great. I like that.
Is the wear and tear on the vehicle, say for instance, if you're an Uber driver, is the wear and tear on the vehicle from the business travel, is that also deductible?
So that will go under the classification of depreciation.
Aha.
So if your vehicle is listed on the tax return as a depreciable asset, that's where that comes in. So you would get that depreciation expense each year.
Gotcha. Okay, so that has to be something that on the taxes, it has to be designated as a business vehicle.
Correct, correct, correct.
Okay. Well, all right. This has been awesome. Vivian London Crooks from London Tax Services. I'm sure we're going to be doing several more of these webinars over the next several months. And anything else that you wanted to bring up before we end this evening?
I just want to say, everyone, happy tax season. I know it's going to be crazy, but just to reiterate to business owners the importance of tracking, tracking, tracking. I can't emphasize that enough. I see it all the time. I see it year after year where people have businesses and they go into business, they know their craft, but when it comes to the accounting or the bookkeeping side of things, they they're lost. The only way that we can prepare that tax return is if your profit and loss is done. So I just want to encourage you to seek a tax professional if you need to. And if you need to know more about different tax strategies that would help you save money, for investing or for going on trips with your family or back into the company, tax planning is the way to go. And you can reach out to us at refunds@londonstaxservices.com, or you can call us at 646 917 7714.
Okay, and the
Thank you for having
website,
us.
London's with an S, taxservices.com. And again, 646-917-7714. Vivian, thank you for joining us this evening.
Thank you, Tom, for having me.
All right, our pleasure. Okay, we're all set.
Awesome. Good. Oh, I only want to do half an hour.